Hello, everyone, and welcome into crushthestreet.com. I got a very important guest today. We're going to be talking about the economy, the Federal Reserve, COVID-19 impacts, the shakeup of our new world, this world that we live in that's become our new normal, and cryptocurrency, precious metals. Someone I met in 2017 when we were really covering the Bitcoin space, we were part of it, and someone who shed a lot of light on Bitcoin for us is Jimmy Song. He's a local Austin fellow here, someone that I've met in person multiple times here in downtown, a really great guy, someone who's just an advocate for Bitcoin. He's a Bitcoin developer, an educator, an entrepreneur. He's an open source contributor to many different Bitcoin projects and is the author of Programming Bitcoin from O'Reilly and the Little Bitcoin Book. Jimmy is a lecturer at the University of Texas in Austin and is a speaker at various Bitcoin conferences around the world. It's a real pleasure to have Jimmy on at this specific time to really give us an update on what's going on in the economy. But I also want to get into Bitcoin as well. We've covered that a lot, and people have a lot of questions with what is happening in this environment. So Jimmy, thanks so much for coming on Crush the Street with me today.
Well, thanks for having me. It's a pleasure to be on again.
And if people want to follow you on Twitter, definitely check Jimmy out there. I'll have the link in the description area. Jimmy, I really want to start off here. First of all, how are you doing with this COVID-19 virus? Our lives being really changed in this new world. I mean, how are you doing?
Well, I'm doing pretty well. I feel like I've been preparing for something like this all my life. I don't know if you feel the same way. I'm sure a lot of the viewers of this channel would feel similarly. It's kind of like, we've been preparing for something crazy to happen. I didn't expect this particular form of crazy, but we've all known that some sort of economic disruption or some weird event was going to happen. And, I've been prepping for the last 8 years to have like sort of a more anti-fragile life and make sure that I'm not vulnerable to any particular thing going wrong and things like that. So in many ways, this feels like it's something that I've been preparing for. I'm not necessarily happy about, having to stay at home and things like that. But at the very least, I feel more fortunate than other people maybe that are now going and, being laid off and things like that. So yeah, I feel very blessed.
Absolutely. You definitely were someone that was talking about the bubble, in terms of the economy back in 2017 and, really what was leading up to where we are today. Of course, none of us really saw this bazooka shooting at this bubble, right? I mean, this is, a lot of people have called it a pin that found the bubble, but I mean, my goodness, our worlds have changed upside down so quickly. We went from February, such a quote unquote booming economy, to this. I mean, 10 million unemployed in just a matter of 2 weeks here. 10 million people unemployed in a matter of 2 weeks. Let's talk about that a little bit. Half the world is on a lockdown. I mean, this is insane, to consider how much our lives have changed. And I'll let you talk here, but one thing that I told you before the interview here is people have alluded to this world of $50,000 gold price or $20,000 gold price. While that's good for those who've been prepared, you look around, you're like, that's not a world that I want to live in. And I'm looking around right now going, this is not a world that I'm overly excited about living in. I'm almost kind of cheering for some green in the Dow Jones and the S&P 500 for some normalcy. So I'll hand it to you.
Yeah. I totally get that. But yeah, you have to realize this is this has been building up for some time. The Federal Reserve has basically been, doubling down every single crisis, printing more money and adding more, more money into the system, injecting more liquidity, if you will, in order to keep the system afloat. And at some point, you have to pay the piper, and that's kind of what we're doing right now. Is that we're we're finally getting to the point where, if you're into Austrian economics, this is the bust part of the cycle. We've been booming for so long that the bust is going to be that much more painful. And that's what we're essentially seeing is all of the malinvestments that have gone on in the last 30, 50 years are now finally coming due. And the Fed is probably going to succeed in being able to push that out again. But the pain is going to be there. All of the money printing, all of the booms, all of the good times that we've had, they have to be paid for somehow. You can't get something for nothing. And unfortunately, we haven't really paid for it yet. So we end up with sort of the insane unemployment and the destruction of savings and things like that we have to pay, at least temporarily, until the Fed's money printing machine really injects a lot of money, not just into the US economy, but into the world's economy.
Jimmy, the stock market is supposed to be a future pricing mechanism, and it's supposed to price in the news. And so we keep getting more and more bad news in terms of, trying to contain this virus. Schools getting delayed for the rest of the year in certain parts of the country. That's probably going to happen across the U.S. More and more countries going into quarantine, second phases of this virus, and just this shutdown of the world. I saw a statistic that said that 7% of the people that were flying a month ago are flying right now and going through TSA. I mean, nobody would have even thought that was possible. Like even me and you and so many of the people that are kind of in our world that, are open to the fact that the government has run amok. I think this was even beyond our expectations for this. But to the extent that the market is trying to anticipate all of this bad news, how much more, or what is left to be uncovered that the market hasn't yet to price in? Do you expect the Dow Jones to go to 10,000, 5,000 points potentially?
Well, so here's the thing about what's going on right now is that if you have any money at all, where are you putting it? Well, I mean, you could try to go get gold. It's not very available right now, especially physical gold. You could try to put it into real estate. Not that many people are selling; they're too scared. But you can put money into stocks. Bond market's completely illiquid. You're not going to be able to buy anything there. So really, you don't really have that much of a choice. You could put something in, I guess you could go to treasuries, but the yield on those on like 6 months is like 0% right now. You're not getting anything. You're really paying them to keep your money for a while. So in a sense, the stock market and real estate, especially over the last 50 years or so, has been, for most people, a store of value. It's not necessarily about, P ratios and dividends and things like that. It's just a place to park your money. And what we've seen over the last 50 years is that when the Fed acts, whenever they're printing money, and the reason why the stock market pays such close attention to the Federal Reserve Chairman is because they know that if the Federal Reserve Chairman lowers the interest rates and opens the discount window, that there's more money printing coming. And what happens to that extra money that gets printed is that eventually it finds its way back to the stock market, and they're front running all of the money printing that's happening. Anytime there's newly money printed, that ends up coming into stores of value. That's just how people think. It's I don't want to lose money, so I'm going to put it into something that's going to store value. For most people, it's been stocks and real estate, and that's why those things have more or less kept up with the federal or U.S. dollar monetary expansion since about 1959. If you look at the M2 money supply in 1959, it was something like $250 billion. Now that seems insanely small to us right now because that's how much is available in that's like 1/4 of what's available on the repo market for hedge funds that need to borrow overnight or something like that. But $250 billion was all of the M2 money supply as of 1959. Currently, it's something about somewhere around $16 trillion, which is about a multiple of 52x over what was in 1959. If you annualize that, that ends up being about 6.7%. Not surprisingly, the Dow Jones index from 1959 to currently, if you annualize, how much it's, the return on the Dow Jones over the last 60 years or so, it's also about 6.7%, which suggests that almost all of the money that gets printed finds its way to the stock market. And that's what's been happening. So what the stock market is anticipating isn't necessarily the bad news, because it's really unhinged from the actual businesses themselves. It's sort of decoupled from like the performance of the companies themselves. You can see it in like the PE multiples and things like that. Instead, what it's anticipating is all of this money printing that's going to happen. I mean, the Fed announced something like $4 trillion available just for, liquidity in the bond markets and a lot of other stuff. There's also a $2.4 trillion stimulus package that's coming on. There's an insane amount of money being printed, and that's what they're going to anticipate. And if like $6 trillion compared to the M2 money supply of 16 trillion, that's a significant percentage. So it's really sort of a way of showing what sort of inflation that it's anticipating, not necessarily the bad news of coronavirus and all that.
Yeah, I've never heard it put that way. And great analysis on that. And I'd love to, if you have anything on that, anything written, or I'd love to get some of that, or I'd have to listen to this maybe 3 or 4 times over. And I will, actually. That was really good. Jimmy, maybe you could give us a little idea of how that money flows through. So you have this money that's printed, and people are going to get a $1,200 check plus, if they're married and they have kids, if they make under a certain amount of money, whatnot. So that gets spent into the economy, and that goes to American Express, and that's what causes the stock price to go higher. Or, how is this money ultimately going into the real estate market, the stock market? What's happening to this money printing?
Yeah. So this is something that I've been studying for the last few years, and it enrages me every time I hear about it. But so vast majority of the money that's being printed does not go to you or me. The $1,200 that we're getting, it's peanuts, right? Like that's what you could have made at McDonald's in a month, in the month that you've been quarantined. So it's really like you're going to not make money off the $1,200. You could have made a lot more money on the amount of money printing, the effect on your savings and so on. You're getting a terrible deal. $1,200 does not make up for the amount of inflation that's going, or the amount of savings that you're being deprived of, and so on. The vast majority of the money actually goes towards banks, right? So when the Federal Reserve, one of the announcements early on that they did was they're going to have $700 billion available in open market operations. Now, what do they do with open market operations? Essentially, they go out into the market and buy certain things. They've limited themselves in that particular announcement to treasuries and mortgage-backed securities. Now, before 2008, the Fed never really bought anything other than treasuries. They were the lender of last resort just for the U.S. government only. So the U.S. government, whenever, it's always deficit spending, so they need to issue debt in order to make up for the shortfall in their budget. So, if they get like $3 trillion in tax revenue and they have $5 trillion on a budget, then they need to make up the gap of $2 trillion, usually by issuing treasuries. Now, a lot of those treasuries goes to the public and get bought up by other central banks and maybe even some hedge funds and so on. But if there's any left over, what happens is the Federal Reserve just buys them. And that's how they fund the U.S. government. This is why you're allowed to have a deficit. Now, it used to be that they only bought treasuries. They really only bought treasuries and lent money to banks that needed it. They're the lender of last resort. But starting in 2008, they started buying up mortgage-backed securities because literally no one would buy them. They were so toxic that no one wanted them. So the Fed started putting them on their balance sheet. That is, they would buy them for newly printed money. So in that way, they supported the mortgage-backed security market as a way to essentially bail out the banks that had way too many of these mortgage-backed securities. They gave them somewhere to go dump because there was absolutely no liquidity in the mortgage-backed securities market. And that was brand new in 2008. What's brand new now is that they are starting to do these operations for a lot of other stuff. So they haven't said that they're going to do this for equities or anything like that. But what they is allowing allowing people or allowing funds and so on to dump bonds, munis, different kinds of bonds, different kinds of equities, and get loans in US dollars. So they get liquidity without actually selling because there's no liquidity in the market. And if they did actually market sell, the price would drop like a stone. So in a way, the Federal Reserve is supporting all of these assets and keeping them inflated. Now, the other way in which the newly printed money makes its way into the stock market is by allowing all of these banks to have a lot more leverage. So one of the things that that was absolutely striking to me about Mike Bloomberg's aborted presidential run is that his net worth as of 2008 was something like $8 to $10 billion. His current net worth is like $22 billion. So 12 years, he made like $10 billion. What the hell happened? It's not like there are that many more people running Bloomberg terminals. And it's not like Bloomberg.com is that much more popular. He didn't do $10 billion more of work. What the hell did he do? How did he make that money? And it turns out that for rich people, they can use debt or credit as a way to leverage their gains on whatever it is that they want to do. So, for example, what Mike Bloomberg probably did was he leveraged his positions in the stock market. So, 2008, he probably put a lot more, took out like a 10x position on the stock market, at least short term, and then made a crap ton of money and then got out of those positions. This is how rich people get even richer, and this is how investment banks and all of that liquidity in the market ends up pumping up the stock market. Is that whenever they get to the banks, well, they have to go lend to somebody. Who are they going to lend to? They're going to lend to big companies because they have the least amount of risk, and they're going to give them insanely good interest rates. So right now, the Fed funds rate is between like 0 and 0.25%. The banks will probably lend out to these, investment banks and so on at like 0.5, 0.75, 1%, something like that. They can take that now they're going and buying, levering up on the stock market. Maybe some are levering down, whatever. But in whatever way, they can manage to, basically lever up and buy way more than the cash that they have, and that brings the stock market up. Overall, some do the opposite and bet on the downside. But overall, because of the additional liquidity injected into the market, you end up with a higher stock market because all of these investment banks they want a place to park their money. They're not stupid. They know inflation's coming. They know that the U.S. M2 money supply has been expanding at 6.7% per year. So this is what they do. They lever up. They can get loans at 1%. They know they're going to get like 6-7% in the stock market. It's free money for them, and they can do that for a long time. And unfortunately, this is how the rest of us get screwed.
Jimmy, was it safe to say that you think the stock market is going to get reinflated here in short order? Back to new highs, potentially all-time highs and beyond, because of what we're seeing with the injection of capital into our system?
Well, it works until it doesn't, and this is one of those things. I think there's something called the Martingale Strategy, like in roulette. So basically, it's sort of a gambler's fallacy, but essentially what you do is you bet on red, and if it comes back black, you bet double on red, and if it comes back black on then again, you bet on red again, and this strategy ends up, winning you money until there's a catastrophic event, at which point you lose all of your money and you go bankrupt. If you have quote unquote bad luck of black like 12 times in a row, you can't double your money 12 times because you probably don't have that much money, and casinos usually have rules on how much money you can bet anyway. So at that point you bust, and then Martingale Strategy basically bust. But that's essentially what the Fed's been doing. So each time there's been a crisis, 92, 2000, 2008, they basically doubled down, right? Like from 2008, the M2 money supply was somewhere in the range of $8 trillion. So right now it's about 16 trillion. It's like they almost literally doubled down the money supply as a result. So they'll keep doing it until such a point at which the rest of the world says, hey, you know what? Like, I don't think this is sustainable, and we're going to get out of it. I mean, there's a reason why reserve currencies in the world don't last more than like 100 years. It's been a little over 100 years for the US dollar. At some point, loss of confidence will happen. I don't know if it'll be at this cycle. I don't know if it'll be at the next cycle or the cycle after that, or even the cycle after that. But at some point, this strategy is bound to fail. You can't just keep anything that's unsustainable, can't be sustained. So, you're kind of playing Russian roulette a little bit if you're, depending on the stock market to inflate indefinitely. I mean, there are companies that have good, good tech or good business and good cash flow and things like that. And I'm sure it would be okay to invest in them. But for the most part, most of the stock market right now is highly inflated because it's taking on a store of value premium. It's not about the company's cash flow or dividends anymore. It used to be like that before the Federal Reserve came, by the way. Like PE ratios were like less than 10 for almost every stock because they were depending on dividends to make up for it. But now that it's taken on this store of value premium, what's essentially happened is that most of them are highly inflated beyond that. So, I don't know when it happens, but at some point it's going to crash. But in the meantime, it'll go up, it'll double every 10, 12 years as it has been for the past 60. So, I mean, it's kind of a weird thing to predict, but it'll either go up or it'll completely bust. That's my view on it.
What a real treat we're having right now with Jimmy Song, everyone. I think everyone is probably like, wait, where's the crypto talk? Where's the Bitcoin talk? But I mean, we're really getting another side of Jimmy here on the Crush the Street platform. And we will get to Bitcoin. But before we do, I want to mention gold and silver in this environment. We're seeing gold come up off of its low that it had in December of 2015. But specifically responding well during this epidemic, this pandemic crisis. It's moving up strongly today. It did get hit a little bit, but, compared to stocks, obviously, it did its job. People were actually able to sell some of their gold to, meet their margin calls, and gold held up pretty strongly in this environment so far. Want to get Jimmy's thoughts on what we are seeing with gold. Do you expect higher highs with gold in this environment, especially as we lose some faith and the dollar might get weaker in this environment with all the money printing that they're doing? Jimmy, your thoughts on gold?
Yeah, so gold is really interesting right now because what you're seeing in the market is that physical gold is actually trading at a significant premium to paper gold. And this divergence is something that a lot of gold bugs have been predicting for a while, but now that it's actually come to pass, it's a little bit shocking to the system. You literally can't go buy physical gold anywhere near spot. You have to pay something like a $200 premium to get a 1 ounce. I forget what the South African one, whatever the 1 ounce coin. It's a significant premium, and that tells me that a lot of what's happening is that the gold market has been sort of infected with paper gold, a lot of it. And I have studied sort of like the gold market in the past 5 years or so. And one of the things I found out is that there are only really about like 7 or 8 vaults around the world that have significant amounts of gold. And that's where pretty much every institution stores them, other than central banks, obviously. But there's one big one in London. I think there's one in Hong Kong. There's one in New York and so on. But these are vaults that have significant amounts of gold. And what these vaults do is they lend out the gold that they have, and they give they lend it out by issuing certificates that can be redeemed and so on. So what that tells me is that there's at the very least, even if they're not fractionally reserved lending it, which some suspect that they're also doing, that at the very least, the lender, the person that's been lent the gold and the person that deposited the gold, there's at least twice as much gold as there physically exists, like paper gold, because the person that borrowed it thinks that they own the gold, and the person that deposited thinks that they own the gold. So that seems to be coming apart a little bit during this crisis, and that's they're claiming, okay, well, there are no Swiss manufacturers that are able to print the gold coin or that are able to mint the gold coins and so on. But there's one, I think. ABN AMRO or something like that. There's one firm that's saying we're going to settle all gold trades in cash over the next 30 days, and then you won't be able to trade gold anymore. So you can't, even if you own like 30 ounces of gold with that firm, you have to settle in cash at the end of 30 days. So they won't deliver physical gold. So that tells me that something really weird is going on, and it's been going on for a while. I suspect that if that breaks, then gold will go crazy. I don't think it'd be an exaggeration to say it could double its price in the next couple of years. But who knows? Like the thing about these things is that the fractures only show when you have a lot of pressure. Right now, there's a lot of pressure because there's a lot of people demanding physical gold. If people stop demanding physical gold because we go back to normal a little bit earlier and so on, then the pressure is no longer there. They're going to be able to sort of fake it for a little longer. So it's kind of like the stock market in the sense that it's either going to go up pretty strongly or it'll just sort of stay in the range because there are people that will be able to manipulate the price through sort of printing paper gold and increasing its supply artificially that way.
Jimmy, let's talk about Bitcoin and the crypto market here, but specifically Bitcoin. We saw during the crash, Bitcoin get sold off with everything else, just like silver got sold off, just like gold got sold off. I know in this non-bull market environment, where it's, we're not seeing 2017 happen. I mean, in 2017, we were going to these meetups. Everyone was trying to be you, right? Learn every single detail, become a coder and become an expert on, how to do all the under the hood things. And, this is a different time, right? This is a build out for the true developers and for the Bitcoin space to grow, but in this environment, talk to us a little bit about what is happening in Bitcoin and, maybe share your reaction to what we saw during that sell-off when we had that crisis, because I think a lot of people want to hold Bitcoin because of a potential crisis. And, if Bitcoin's not going to be the safe haven, why hold it?
Yeah, so a couple of things about that. So a lot of people want Bitcoin to have sort of like a nice steady price compared to the dollar, right? And the fact of the matter is the dollar is the thing that is actually very, very volatile. And what we saw in on I guess March the 12th or whenever it was when it dropped significantly was that there was a giant liquidity crunch on the dollar. Everyone wanted to get to the dollar. It wasn't necessarily Bitcoin being volatile, it was the dollar being volatile. Everybody, like the stock market, anybody that had anything that was liquid, they were getting margin called. And this is kind of what happens in a debt-based economy, is that when there's a credit crunch, that everyone needs to flow into the unit of account, which in today's world is the dollar. So anybody that had any foreign currency, they wanted to go to the dollar. Anybody that had like gold, even they wanted to go to the dollar because, of course, they're scared. And this is the most the dollar, like it or not, is the most liquid thing that you can hold at this point. So that is due to sort of the many different things that have been happening, including coronavirus and so on. So in a sense, the Bitcoin price drop isn't necessarily reflective of Bitcoin's volatility. It's more reflective of the dollar's volatility. Second, every other currency managed to keep sort of a peg because they have a central bank. So, the Bank of Japan has they have a bunch of treasuries that they can sell if too many people are demanding dollars. European central bank has the same thing. Every other central bank keeps a reserve of dollars for that reason. This is why they buy treasuries. So they can keep their currency within a reasonable range, or a range that they feel comfortable for imports and exports. If your currency is too high, then no one buys your exports. If your currency is too low, then you can't import anything. So it's very important for every central bank to keep that peg. Not the least reason being that they have to settle in dollars anyway. So as a result, every other currency manages to sort of keep like a steady range against the dollar. Bitcoin is decentralized, so it doesn't have a central bank. It doesn't have anybody that's, just sort of keeping things in a particular range. And as a result, it has more volatility than some of these other things versus the dollar. It's actually more reflective. You saw in the stock market that they had like circuit breakers and things like that, which is to reduce the volatility as much as they can. Bitcoin doesn't have that. And what we've seen is that it hit a low very quickly to $3,800. And then it rose back up. It's now currently trading at around 6,900, which tells me that that kind of volatility is somewhat natural in sort of shock events like we're experiencing. And that what Bitcoin is, the volatility of Bitcoin is something that we should really expect more of, rather than sort of the artificial steadiness of a managed economy like a lot of these central banks have. Instead, with those managed economies, you have giant black swan events like what we're experiencing now, where you have a complete disruption of everything, and then everything goes down all at once. So, in a sense, like what the price of Bitcoin, if you're concerned about that, you have to think long term. If you bought at like $3,800, you did perfectly fine, right? Like you're very happy right now. You're doing great. Even if you bought at $10,000, you're like, you lost 30%, but it's a lot better than losing like 70% or something like that. And there's still upside to go with the halving and all that stuff. So in a sense, like you're never going to get something for free, right? Like something for nothing. They want zero volatility and all the upside in the world. That's what everyone wants. But investing is all about trade-offs. With Bitcoin, you're going to have more volatility, but the long-term upside is significantly more. So that's the value prop. And also, Bitcoin is a very good store of value compared to all of these other things. Instead of just keeping up with monetary expansion like stocks or real estate does slightly worse than 6.7% per year, by the way. But you're actually beating it, which is exactly what you want, and that's because of its inherent scarcity.
Jimmy, let's get some comments on, let's say somebody like Peter Schiff, who thinks Bitcoin has no value going into this environment, ultimately going to go to zero type of thing. And what would you share just for a more general audience, not going back to 2017, talking about all the upgrades and the details. I mean, we're at a different time right now. I mean, people want to know, is Bitcoin going to be around in 5 years? Address that for us.
Yeah. So first of all, Bitcoin's lasted 11 years already, and most people didn't. A lot of people didn't think it would last even that long. And the fact that it has tells you that there's a lot of people that have put money into it, and that have put that are storing value in it, and so on. Now, it doesn't have the history that gold does. Gold's been around 5,000 years and so on. And the U.S. dollar has been around, at least in its current form, for a little over 100 years. But as far as Bitcoin is concerned, the longer it lasts, the longer the more people will trust it, and that's what we've seen. Even like 6 years ago, it was hard to get people to even understand what Bitcoin was. Now they're starting to get it, and it's because of the fact that there are no real good stores of value. I mentioned stocks and real estate before. Those two things have enormous friction, right? Like and an enormous time investment that you need to put in order to buy some. If you're looking to invest in the stock market, what you end up doing is researching like 800 different stocks before you pick one or two or five or whatever, and then invest in those. If you're investing in real estate, you have to look at like 30 different properties before you find one that you think is a good deal. And this is because those things are not fungible. There's a difference between one property and another. There's a difference between one stock and another, and so on. So all of that time and investment makes storing value in those things very hard. And this is not by accident. This is part of the design of any sort of like Keynesian economy, is that they want circular flow. They want velocity of money. They want money to flow through the system. And anywhere that is a store of value is essentially a place that money parks itself. That is, it's not moving its way through the economy. So in a sense, Keynesians have made it very, very difficult for us to have a store of value. And the only two stores of value that people really use are stocks and real estate, and to some extent gold. But, again, gold is kind of manipulated, as I alluded to before. With Bitcoin, it's nice because you know exactly the supply, and you know that there's not going to be an asteroid that hits the Earth that's made out of gold or something like that, completely destroying the value of gold. You don't have that, and as a result, it's a good place to store your value, and that's what more people are seeing. And the stats that I've seen from a lot of exchanges and so on is that soon as Bitcoin dropped, there were tons of people that were going on to every platform signing up. It seems that the large drop that happened on March 12th was largely due to leverage longs that got liquidated, and that caused sort of like a cascade down to 3,800. But the number of people that signed up that day, I've had multiple companies tell me that this was the best day that they've had in many years. That they had more signups, more volume, more people wanting to buy, that deposited, that bought, than any other day in their history. And so that tells me that a lot of people are looking for good safe havens, and that many people already believe it. Now, if you don't believe it, just wait, right? Like, if it takes you another year to really learn about it and get comfortable with it, then so be it. But but if you do invest, like, be in it for the long term, right? Like, don't do it for 6 months when it doubles or halves and then you get out. Do it for the next 5 years, right? Like, this is a store of value. It's something that you want to be able to fall back on if something bad should happen, kind of like what's going on right now.
Absolutely. Okay, last comment on Bitcoin versus gold. Or I want to ask you about Bitcoin versus gold. Is it competitive to you? Is it one versus the other? Kind of both, two-pronged approach. And then, my goodness, we're actually seeing Bitcoin have quite the move here while we do this interview. It was not strategically planned at all, but $7,100 Bitcoin. Should have this interview up in 24 hours. So we're doing this on April 2nd. Should be up on April 3rd. But it's obviously having a move here, breaking that $7,000 mark. Maybe just some comments on Bitcoin versus gold, and then also the halving that's coming up here in May. Its impact on what you would expect going forward here. And then I have one more thing I kind of want to wrap this interview up with that we talked about in the pre-interview.
Okay, yeah, sounds good. So let's start with what Bitcoin versus gold, and that's an excellent question. Now, the thing that gold has going for it is that it has been around for a really long time, and people have used it as money for thousands of years, and that gives it a history and an easier place to trust and so on. The thing about gold that makes it difficult is that is its physical nature. Now, despite the fact that it is very divisible, fungible, and all this other stuff, The fact of the matter is that it is actually physical. In order to take delivery of gold, you have to actually physically receive it. And that's probably the biggest weakness versus Bitcoin. In order to go get a 1 ounce gold piece, you have to have it mailed to you, right? And that is actually very difficult. And central banks have realized this thing since Bretton Woods. It is essentially like you had the dollar exchange standard, but unless you actually got the physical delivery of gold, the U.S. could print as much dollars as they wanted to, and that's essentially what they ended up doing for most of the 50s and 60s, and they had to pay for it with the entire lost decade of the 70s in order to make up for all that monetary expansion. So. I mean, gold is kind of nice in the sense that it is physical and it's more trusted, but Bitcoin is nicer because it doesn't require that physical delivery, and you can store it a lot easier. You can back it up. You can do things with it. It's what I would call metaphysical money. So gold is physical. You either have it or you don't, and it's a piece here. But with Bitcoin, it exists on the metaphysical realm, right? Like it's literally a private key. It's a number that only you know, and if no one else knows it, then you have title to it. If you want to give it to someone else, you just send it to their big number. And you can back up that number. You can split that number. You can make it so that it has to have like 3 or 5 of those numbers, and so on. So it has security properties that gold just simply cannot match. So I could, for example, set up my Bitcoin in such a way that if I lose my private key, that 3 of 5 people that I trust, if they agree that they can restore that Bitcoin back to me. That's something that gold cannot do. If you lose a piece of gold, it's gone forever. I mean, same's true if you only have like a single key locking your Bitcoin. So in that way, I think Bitcoin is better, and it's much more appropriate to the digital age. It gives you more. It's sort of like stricter property rights over your property. There's not going to be an executive order 6102, confiscating your Bitcoin, and you have to comply to it. You just say, I don't have any, and there's no way for them to really prove you wrong, right? Like, if you don't have, unless they happen to be surveilling on you and have records and stuff like that. With gold, you hand over the gold, right? Like they can physically seize it. With Bitcoin, it's not like that. So, it's stronger property rights. So in that way, it's better. As far as the other question, which is about the halvening, I think I heard a term this morning that I think is very appropriate. Bitcoin is going to go through a quantitative hardening or a quantitative tightening instead of a quantitative easing. Essentially, it's going to be harder to go to produce Bitcoin because there will only be 6.25 Bitcoins every 10 minutes produced instead of 12 and a half. So that means that there's going to be a supply shock, and that will work its way through, kind of like the Federal Reserve's quantitative easing program. It took about 12 years for prices to sort of catch up, and you saw the real estate bubble and the stock market bubble start to form during the last 12 years since the 2008 crisis. It seems that like whenever Bitcoin has a halvening, that the quantitative hardening takes a little bit of time to happen. So I expect Bitcoin, for that to happen over like the next year and a half after the halvening, and that will make it so that there's less supply and steady or increasing demand causing the price to go up. So that's what I expect to happen.
Jimmy, last question, and this is going to kind of go back to the coronavirus, the current state of the world. With half the world right now in some form of quarantine, we've seen a power play come from governments that is kind of scary. What we know about governments is when things get implemented, it's hard to reverse things. It's very easy to implement, but very difficult to rescind, right? So I'd like to just kind of end on this topic here. The current state of the world, do you have any concerns about, where things are going in terms of government? And I guess the flip side to that is, should society be doing what they can to come together and try to control this coronavirus, in the future? And what's the balance between that and, a power play from government?
Yeah, so I mean, what we're seeing is a lot of authoritarianism being spouted by governments. I mean, you're seeing orders saying, if you're non-essential business, you have to stay home. I don't think there's been any time in the history of the United States where that happened, where we weren't on like sort of like a geopolitical scale, done in a state of non-war. So it's kind of unprecedented in that regard. And as you hinted towards, a lot of these temporary emergency measures have a way of becoming absolutely permanent. The Hungarian parliament just passed the Coronavirus Act, essentially giving emergency dictatorial powers to their prime minister. I mean, that's crazy. The fact that people are willing to give up all of these things is actually quite frightening, much more frightening than coronavirus itself, in my mind. And this is a playbook for every government from here on in. It's scare people about their health, and then they will be begging you to take their civil liberties away from them. And that, as a libertarian, that's horrifying to me. And the fact that so many people are saying, well, we should make sure everyone's trapped in their homes until such and such time, and if they come out, they should be thrown into prison. And like, that's not libertarianism. That's totally like authoritarianism. It's crazy that people are thinking that way. But unfortunately, that's kind of what happens when people are scared. There's a reason why. I used to talk to a few people that used to live in the former Soviet Union, and what they would tell me is that they would constantly be told that they're just about to get invaded, that there's a disaster just around the corner, and we have to work really, really hard to prevent this, that, or the other. It's a way for governments to control people. And they found out, of course, after they came out of the Soviet Union, that all of that stuff was complete BS. Now, this current crisis, it might have more legs, it might not. I don't know. It might be true, it might not. I don't know, right? Like, I'm not an epidemiologist or whatever. But whatever the case is, the governments now have a playbook. It's scare everybody and then take whatever powers you need. And that should be frightening to anybody that cares about personal freedom and so on. So that's what I would leave you with. I would say that Bitcoin is one way to start getting them to not take so much power, because the separation of money and state is an important part of not letting them have so much power. Because if they control the money printer, they can spend however much they want. If they don't, then they're restricted by the tax revenues that they get. So I would say Bitcoin is sort of like the first step in claiming your rights back from the government instead of waiting for them to give it back to you.
Jimmy, what a treat it was for you to come here on Crush the Street. I don't take it lightly, and I really appreciate your time here. If people want to learn more about you, the work you do, obviously you're constantly educating yourself on the economics of things, sound money, Bitcoin. Where can they go and what can they expect to find?
So you can go to programmingbitcoin.com. That's my website. And I have my programming book, Programming Bitcoin from O'Reilly there. I also have my other book, the Little Bitcoin book. That's more for people that don't know that much about Bitcoin. It's for them. It's just to be able to read in one sitting and understand what Bitcoin is. And like the whole first chapter is actually about how money is broken in today's society, and it doesn't mention the word Bitcoin once. So, if you're curious about this sort of economic stuff, that's a good book to pick up, and it'll make a good case from a humanitarian perspective, from a human rights perspective, on why Bitcoin is so needed. You can find me on Twitter at Jimmy Song. I'm also on Medium at Jimmy Song. I have a newsletter, jimmysong.substack.com. I also have GitHub, if you're a programmer, at Jimmy Song. And you can follow me on all of those channels. I also have a YouTube channel, Off Chain with Jimmy Song. you can look that up on YouTube as well.
Thank you, Jimmy, so much for your time. Appreciate it.
Thank you for having me.